Welcome back. Like several banks, Bank of Baroda too has posted a superb set for FY23 and for the fourth quarter. Fourth quarter profits are up 168%. Margins highest in 8 years. NPAs lowest in 8 years. Return ratios, again, ROA and ROE best in 8 years, 1.34, ROE nearly 25%, 24.8. To tell us if the good times will last, we have with us the big man himself, Sanjeev Chadha, Managing Director and Chief Executive Officer at Bank of Baroda. Mr. Chadha, good morning and thank you very much indeed. First up, of course, many congratulations. But I'll start with the skeptical questions that analysts would have normally asked you. NIM is absolutely a positive number, but with the rate cycle picking up, is this the peak, 3.53?
So I think you're right. If we were to look at the near term, this possibly is the peak. There would be some residual pressures which will be there on the deposit side, which will manifest themselves for next few quarters. But we believe structurally, I think there are a few things which are happening in the bank, which should help sustain or improve margins in the medium term. As an example, for instance, you would have noticed that over the last 1.5 to 2 years, our international growth was very, very fast. Now, that's something which should now come in line with overall growth, and international margins obviously are a bit lower. Similarly, the share of retail continues to grow, and there the margins are better than wholesale. Corporate also pricing power is returning to banks. So I think broadly, I think we are in a positive environment, but I think you are correct that if you would look at the near term, then possibly we are at peak margins. Our guidance is that our full year margins are about 3.31%. That's something we should be able to sustain in the coming year.
Okay, that's not too far from 3.53. Now this I have to get out of the way first. What's your exposure to the airline that is in trouble, Go Air? We understand you provided some for it.
So again, Lata, we normally don't talk specific accounts. In this case, of course, it's in the public domain. There was a filing by the company in the NCLT. So the company has indicated that Bank of Baroda has exposure about 1,300 crores, which is pretty much near to where we are. This is not counting the government guaranteed portion. We are, of course, very well collateralized here. We believe that the airline business is picking up, and there's a fair possibility that the company might actually fly again. But nevertheless, to cover any potential downside and more than that, we have provided 500 crores in this quarter.
Okay, well, speaking of provisioning, this complicated expected credit loss provisioning, we are given to understand that RBI might start asking banks from April 24, that is FY25, to start the process of provisioning. What is the number we should work with? Is it going to be as much as 4% of advances? What should we work with?
So I think it's, I can only speak for ourselves. I think the number is far lower than that. The guidance we are giving is that we believe that through cycles, our stable credit cost should be about 1%. Currently, we are about 0.5. Now, I think whatever might be the impact of ECL, which of course will get crystallized once the RBI finalizes its guidance, I think it should be absorbed within a normalized credit cost. So the upshot is that the kind of earning trajectory we have seen should continue unimpaired despite what might happen on the ECL front.
Okay, your normal credit cost, you would say, is 1%?
I believe so, which as against 0.5 that we reported the last quarter.
Fine. No, I take your point. Within the cycles, of course, the credit cost might change, but that's very reassuring. You referred to the retail loans growing fast. Now the Reserve Bank has mentioned that unsecured loans and retail loans in general is something banks should be wary about. Have you noticed any loss of quality? CIBIL was on our channel and they said that the under 50,000 rupee loans are distinctly indicating signs of delinquency.
For us, I think the book appears to be very robust. It also depends on the composition of the book. The first thing, again, I would like to point out is that it depends also in where you are in terms of retail business. It's only last few years we have grown our retail business aggressively. Today, retail is about 25% of our loan book. Now, if you're a bank where 50% of your loan book is in retail, then I think there might be scope to exercise caution. For us, in terms of risk management, we believe that over cycles, the risk actually has come from the corporate book. Our corporate book is still about 43% of our book. And I think an increase in retail, say up to 30-35%, actually helps in risk management from our perspective. Of course, you need to make sure that the composition of retail is right, that you get the risk management right. But as we speak, 70% odd of the portfolio is home loans, and it's diversified: education loans, car loans, mortgages, personal loans. And each one of them is actually growing at a robust pace. It's not that it is a skewed growth. So we feel very comfortable in terms of our retail portfolio. One broader point I would want to make again, and that's in the context of where we are as a country. Take an example, say, of Australia, where 200% of GDP, that's what mortgages correspond to, right? Our total bank indebtedness is way, way below that. So I think where we stand as a country, where we stand as an economy, and where we stand as BOB, with just 25% of the book in retail, we are completely reassured.
No, I take your point. But one part of the, well, not retail, but MSME book, clearly we saw an increase in slippages. You said that in the analyst call as well. And within retail, your SME loan book also has grown by 11% year on year. So should we be prepared for any more problems?
So I think most of the challenges that we see in MSME are the residual challenges post-COVID. It was MSME which contributed to the largest proportion of the restructured book. And some of that restructured book is either coming out of trouble or is slipping into NPAs. We believe that this residual book, which was impacted by COVID, this should play out over the next 2 quarters. And then we should see the MSME slippages also coming down. Again, I would want to point out that if you look at overall slippages for the bank, ultimately it is determined by how corporate behaves. Corporate and international is 60% of our book, and their delinquencies are at an all-time low.
Okay, yeah, of course. Corporate book has grown 13%. Have you seen the capex cycle pick up? Do you think this 13% will grow significantly? Corporate book.
So I think from our perspective, it is really getting the risk-return equation right. There were opportunities in corporate even 1.5, 2 years back, but the returns were not commensurate to the risk. So we grew our corporate book only by 6%, and we focused on the international piece where there were better opportunities. Today, I believe pricing power to some extent has returned. It is possible to grow at 13% while keeping margins intact. So our stance really is determined by whether you can price your risk adequately and then generate returns.
Okay, actually, even international book, I suppose the problem in terms of size is not big, but in terms of headlines, South Africa or some of them sometimes capture headlines. You don't see any problem in your international book, do you? I mean, India is growing faster than the world.
Yeah, so I think the factors for us, the international piece is the one which you can calibrate depending on how, again, the domestic piece is behaving. So since the corporate lending in the domestic market was constrained last 2 years, we grew international more aggressively. But interestingly also, in international, if you were to adjust for costs, our ROA is better than the domestic. So we today have net margins about 2%, and the operating cost there is sub 20%, right? And credit costs are negligible. So you're making better ROA. Having said that, we believe that the situation in India is now much better, and increasingly this year there'll be more capital allocation on the domestic side, and international will grow in line with overall growth.
Okay. All right. Just a final quick question. Any listing plans, any subsidiaries, JVs?
So I think we are pursuing some opportunities with some of our companies, credit cards, life insurance, one of the banks in which we have an investment. Of these, I think in terms of listing, it is the life insurance subsidiary which had filed a DRHP and which is now at an advanced stage in terms of the process. The timing, of course, works based upon the markets.
Okay. All right. We have plenty of questions, but it's results time, so we have more companies. Mr. Chadha, it's a pleasure speaking with you. Thank you very much, and many congratulations for a brilliant career at BOB. Thank you for joining us.
Thank you.